Jason. I'm Tracy Reinick, and I'm back for all the earnings action. And I know every quarter I say this is the most important quarter we've seen in years, but this quarter is actually one of the most important we've seen in years. And I say that because we're about to get an earful about what's happening in the economy. We're going to see guidance cuts. We may see a few increases in guidance, but probably not as many as the cut side. And we're going to find out more about the slowing of the US and the global economy. And we're going to find out what's really going on in China with their COVID shutdowns and how that's impacting business. It's going to be a busy one. And as always, it launches with the big banks. So we're going to start hearing from them this week. Now, I know a lot of people are interested in the banks because I am, because the Fed is raising rates, and that is usually a good thing for bank earnings. But the bigger banks are a little more complicated than the smaller banks are in terms of how much that is going to impact earnings, because they got a lot of balls in the air. They have investment banking. They're big on mortgages, which are now getting hit by the rising rates. And so it's not just net interest margins and the rising rates that is going to fuel these bigger banks. They're also all off their highs now. So is this a buying opportunity in the big banks, even in the face of an approaching possible recession? I don't know, but let's dive in and see what the earnings charts are looking like for these big banks, because that part of the story is also interesting. So the first one leading us off is going to be JP Morgan Chase, ticker JPM. It is considered to be the premier bank. It's got a good earnings surprise track record, as you can see, just 3 misses in the last 5 years. One of those was the initial pandemic quarter, but the second one, or third one on this chart, I should say, was last quarter. So that was a rare miss by them. Shares are off big off those 2021 highs, down about 28% here. Is this a buying opportunity? They also pay a nice dividend, yielding 3.5%. So you are getting something for your troubles. And again, this is the premier bank. Maybe this is a time to start checking it out and listening in to see what Jamie Dimon is going to say this quarter. He's been kind of warning about the economy, but are they seeing it in their actual earnings and underlying numbers? We will see. Then we're going to go to Citigroup, the one that has been most problematic, I would say, since the start of the pandemic. But as you can see, it has a great earnings surprise track record. It hasn't missed in 5 years. That's very impressive given what's been going on during that time. But these shares are down big too, down 23% now year to date, and even bigger off their 2021 highs. They do have the new CEO, but their business model is a little different than some of the other big banks because they have a lot more international exposure. So how is that playing out, especially Europe with the Ukraine war and the energy issues and a slowing economy there? This bank has a lot of different things going on. So keep that in mind when you're considering it, I should say. And you do get a big dividend with this one for your troubles, paying now 4.4%, but that's because the shares are down so big off of those highs. So you got to weigh the pros and the cons here, but those looking for income might want to be interested in Citigroup. Then we're going to switch over to Wells Fargo, the one that had been in the doghouse until early here, 2022, where it did look like it was about to stage a breakout, but it too has finally succumbed to some of the selling pressures, down 17% year to date. So not off as big as some of the others. Now, Wells Fargo is the big mortgage bank, and already the CEO has been basically warning that mortgage business is down big and that they are laying off people. This should not be a surprise, as what has happened with mortgage rates back up over 5%. And not only does that impact new home sales, but also refis. Everybody was refining when it was down under 3%. So that was big business for them. And now this is going to slow. So the warning's already out there, but the street may be pricing them in. We will see. They too pay a dividend yielding 2.5% for Wells Fargo. Then we're going to wrap up the biggest banks with Bank of America, of course. BAC is this ticker. Good earnings surprise track record. Just the two misses there when the pandemic hit in 2020. But this one too, down big off of those early 2022 highs. Could this be a buying opportunity of Bank of America? This is one of the largest holdings in Berkshire Hathaway. Is Warren Buffett buying more? That's a good question, right? We don't know, but we may find out by August what he was doing in the last quarter here. But Bank of America yielding 2.5%. So it's a little bit under some of the other bigger banks in terms of dividend. But if these shares continue to sink, that dividend yield could look kind of juicy. Then we're going to add and wrap it up with First Republic Bank, FRC. Now, this is one I have talked about many times on this this earnings all-star in the past, but it is the least known of these kind of bigger banks. First Republic is in the Bay Area, and it's kind of a wealth management type bank for the Bay Area, and that means a lot of the rich tech executives. So this one had been gaining assets all during 2020 and 2021 as obviously technology shares and those stock options were rising. So the wealth of people who have a First Republic Bank has been rising, but this one too, down on the year, down 27% here year to date. But it is a good track record. The last miss was in 2019, and then it's put together this big string ever since. But can it hold this earnings beat? And will this just get cheaper here? You don't get as big of a dividend with First Republic because it's kind of a growthy bank. So they don't reward shareholders with the dividend because they're banking on this big rise in the shares, as you saw. I mean, how many banks are more than doubling in 2 years' time? Not that many. But now that it's pulled back, dividend is yielding 0.7% here, so not even quite 1%. Could this be a time to get in here, or will they be sounding the alarm about what's happening out in Silicon Valley right now here in 2022? We don't know, but this is one I'm going to be tuning in for sure during the bank's earnings season. So as you can see, there's a lot going on, even with these big banks. We're also going to hear from some big regional banks starting this week, including PNC and State Street and a couple of others. PNC is one of my favorites, ticker PNC. So you should be tuning into that one to kind of see what's happening at the regional levels. But a lot of the bank earnings are going to be impacted more at the regionals and then even smaller at the community bank side. But how much is the offset in the mortgage business going to impact? We don't yet know because, as I said, mortgage lending is basically kind of fallen off a cliff here in the summer of 2022. So how is this all going to play out? It's going to be interesting. We're also going to get a handful of other companies reporting this week to kick off the earnings season that are going to tell us some interesting things, including Fastenal, ticker FAST, and Cintas, ticker CTAS. They're on the uniform side, Fastenal is on the manufacturing side. So if you want to know what's going on in these various segments of the economy, it's good to turn into some of these companies outside the banks because we're going to get clues from all of them. And it's not just about retail and, say, housing, but a lot of other businesses are being impacted by inflationary pressures, as well as what the Fed is doing with the rates, and will give us some insight into a possible upcoming recession. So you want to be tuning into everything this earnings season, and I'm going to be bringing you both these earnings all-stars videos as well as my usual charts on Twitter and StockTwits. You can see the earnings charts over there. I'm going to be posting dozens of those. And I'm going to be tuning into the conference calls as well and live tweeting out what's going on the conference calls. So as I said, there's a lot going on. And here at Zacks, we've got all of earnings covered, including the earnings updates every week by Shiraz Mian. Those are excellent. You can check out those articles on our earnings page and our homepage. But again, be sure to get us somewhere, get us on YouTube, subscribe to get all of our videos, follow me on Twitter, follow Zacks.com on Twitter to get all of our earnings data and updates. And I'll be with you all during this earnings season. So I'll see you again next week with some more earnings charts.